Okay, this is Brent from TradeGuild.blogspot.com, and we are looking at the market for July 31st, Tuesday. Last night on the blog, I was saying that I wasn't really happy with the way Monday's price action looked. It didn't really look like a market that was losing downside momentum and maybe was going to make a move to the upside. It looked more like a market that was experiencing an oversold bounce, working off over sold tension. So anyway, today opened up the market with lots of great news. There was upbeat earnings coming in from GM. They had a larger than expected Q2 profit. Johnson & Johnson revealed a plan to save $1.5 billion in '08. DuPont accelerated their buyback program. The core PCE came in, which is the Fed's favorite gauge of inflation. That came in at 1%, which is well within the Fed's comfort zone, and it gives the Fed some flexibility, and possibly that could materialize in the form of a rate cut at some point. The Dow was up as much as 140 points today. So the news today was just brilliant for the market, and the S&P and the Nasdaq effectively were trading up above Thursday's close, so they had wiped out all of Friday's decline. However, around 1:25 p.m. today, the subprime concerns rose up again, along with a 1% spike in oil, and the buyers were selling back into strength. So we're going to take a look at the S&P real quick. I have a chart up of the daily, and last night I did a post about volume, and I just wanted to point out on the chart real quick what we were looking at on the volume here. Just some warning signs, into this advance we see declining volume over here. That's not a very good sign. On this big volume day over here, we're seeing these stars and dojis, and then we'll see this big candle over here with an increase in volume, and it's pretty much just a lot of warning signs right in here, and right here this is just a definite it's time to go sign, and by the time this happened, we're breaking support in here. It's all over at that point. Really, it's all over down here, but let's take a look at a 15-minute chart here. Here's my pen, and we're going to just take a look at today. We see this really nice gap up here today after yesterday's price advance, and note just what happens to the volume going into the afternoon. The volume just falls off as this is making its attempt to test that early morning high, and that was just a complete failure. And then we see volume picking back up to the downside. Just a really ugly day. So I'm going to show you real quick my 3C indicator on a 1-minute chart. On a 5-minute chart real quick, I have the spies up here. Okay, so here's a 5-minute chart of the spiders with one of my 3C indicators in blue here, and I use this to track accumulation distribution. You can see it did a really nice job with a positive divergence over here going into yesterday, calling that rally, and then we see the higher highs over here, and the indicator failed right there. If we look at a 1-minute version of this, it gets even a little bit more detailed. I don't know if you can see this real well, but anyway, it's moving up with price into the 30th, Monday's afternoon trading, and you can see this divergence starting to develop there. It's a negative divergence, and then by the time we have the open for Tuesday morning, it's a very negative divergence right there. So this indicator was calling trouble in this area as early as this morning, really. So let's take a look at some other stuff here. Oil, like I said, oil closed at a record high today, up there at $78.21, breakout from this pattern over here. So that didn't help, and despite oil being up, the energy sector just did not participate in those gains today with oil. So the IWM has been performing really lousy. Actually, it's been a lot worse than the rest of the market. Again, we're looking at this 3C indicator. You can see just negative divergence into this whole rally through the last 4 months there. Okay, and the trend, I'm going to put this on the line chart. Generally speaking, when you see a spike in the trend, it correlates pretty closely with a short-term bottom over here, over here, and so forth, up here and here. If we look at a 5-day chart, it becomes a little more apparent. Oh, there we go, 5-day chart. And let me pull out a pointer, and you can see trend spikes with volume. So anyway, we got a spike in the trend again last day or two over here. So possibly, you know, this is calling a possible bottom. It's worked in the past, but basically what we want to see, what I would like to see, is just a big blowout with a whole bunch of volume and a swift move down, and then maybe a little sideways action for a little bit, and see what this market can do. I don't think it can do very much, but I think it will set up some nice short opportunities for us. Let's take a look at a couple trades that I'm in right now. Believe it or not, I'm long in the market. I made a lot of money yesterday long on my positions, and this is VNDA. This is one that hasn't really done anything yet. Let me get rid of that, and let's pull out some trend lines over here. And basically, we're just looking at a more or less a rectangular consolidation. Anyway, it's at the bottom of that range over there, which means, you know, it's in a pretty decent area as far as risk and reward go. Your stop can be right below these lows over here, so you know it's not a whole lot of risk. And I think this is a pretty decent base. It held up pretty well today, considering the market. And I just want to show you a couple things on this with 3C. You see, with this 3C indicator, we've got a really positive divergence that's been brewing there. So that's why I like that trade. Another one that I'm kind of in a holding pattern on is PRZ. And you know, this is a really low volume, cheap stock. So, you know, take it in stride. Lots of volatility with these stocks, but you know, I love these stocks. I get very good 3C signals on them, and they work out a lot of the time. So anyway, there's another very positive 3C divergence there. And this one is kind of let's draw some trend lines here real quick. It's kind of a little bit like a pennant. And we see the volume declining in here. Actually, you can see the volume declining this whole way. Again, you know, it's at 35 cents. This is crazy money. You know, money you can afford to lose, more or less. If you want to give it a whack, maybe it doubles. I don't know. But like I said, for some reason, I get very good signals with these stocks, and they've worked out pretty good in the past. So take a look at those. I'm going to hold off on any other recommendations in trades. I think as the S&P, as the market really, I'm just saying the S&P because that's what I'm pulling up, as the market finds a bottom, we're going to be looking to see if we can establish some short positions as we rally into resistance. So we'll be looking at those in the next couple of days, I think, and I'll put out another video with some short ideas. I don't think this market is going to be making any new highs anytime soon.